All right, another big dip causing fear in the markets. But is this just a bump in the road or something even worse? We've been here before, everyone. Every bull market has its crashes. Some are just dips, others absolute destruction, which is kind of fun to watch if you've taken profits. The difference between making life-changing money and getting wrecked is knowing which is which. So let's cut through the noise. Today, we're going to go back in time, exposing the brutal reality of past crypto bull market corrections, because history might just tell us exactly what is coming. Right now, the same question is on everyone's mind, or most people's mind, not mine. Is this a mid-cycle correction before Bitcoin rips higher, or is this the beginning of a drawn-out bear market? If you want to see our thoughts on that, check out our previous video where we talk about the current correction. Today, we're going to be looking back, analyzing every single major bull market correction to see how this one compares. 2013, 2017, and 2021, which I've lived through all of those. Each had brutal dips, but only one marked the final top. All right, let's rewind the clock to 2013, one of Bitcoin's most chaotic, gut-wrenching, and ultimately most profitable bull markets in history. It was incredible. I promise you guys, that was amazing. The first parabolic explosion, Bitcoin started the year at $100. By December, it was over $1,100. That is an 11x in just 12 months. But here's the thing, guys. It wasn't straight up. It wasn't just a straight line up. People love to talk about how Bitcoin is going parabolic, but they forget that it got absolutely wrecked along the way. And this is where the indicators tell the real story, okay? Let's go back to April of 2013. Bitcoin had surged to $266 and everyone was euphoric until it crashed 75 freaking percent down to $50. I remember that clearly. That's right, a 75% move down. Imagine thinking you hit the jackpot only to watch 3/4 of your portfolio get absolutely destroyed. The headlines were the same as always. Mainstream media, oh my gosh, shoot me in the head. Bitcoin is dead, it's just a bubble, crypto is over. You know, the stupid influencers that don't know anything in this space. And a lot of people probably thought, well, that's over. I guess I might as well cut my losses and call it a day. But here is the reality, guys. This was just a mid-cycle correction. And the indicators, they were screaming that the bull market wasn't over. The stock to flow model, which tries to guess the Bitcoin price based on how scarce it is, suggested Bitcoin still had room to run, showing Bitcoin was still in the accumulation mode. The supply side economics were not shifting. The halving cycle was completely intact. Even though price collapsed, on balance volume, which tracks money flow in and out of Bitcoin, recovered really fast. This was just to tell the smart money was not exiting. In fact, accumulation was still happening while retail was absolutely in panic. The network value transaction ratio, which shows whether Bitcoin's price is justified by actual blockchain activity, spiked before the crash, signaling that the price was running ahead of actual on-chain activity, but it quickly reset, showing that the blockchain was still being used at a healthy level. Another sign that the market was not done. Now, the lesson, if you were looking at the right metrics, you knew that was not the end, and smart money was looking at the metrics. Bitcoin exploded from there, ripping from $50 to $1,100 by December. That was incredible. I thought it was going to go to $100,000 back then because there was nothing really telling me otherwise. By the end of the year, Bitcoin was in full mania mode. The retail FOMO was insane. Everyone and their dog was piling into Bitcoin, and this is where things got very dangerous. December 2013, Bitcoin peaks at $1,100. Then absolute destruction, an 87% crash Bitcoin collapsed from $1,100 to $150. A real bear market had begun. But here's the thing, those indicators were flashing red before the crash. The signs were there. The stock to flow model showed Bitcoin was massively overvalued. Even though it had worked for mid-cycle predictions, it was just breaking down at the peak. And this was one of the first times the stock to flow failed to predict Bitcoin's true market top in hindsight. But here's the thing, the stock to flow wasn't around back then, and even if it was, it is a sort of model that becomes more accurate with more data, which means time works in its favor. But the OBV stopped climbing before prices topped. Translation, smart money was getting out while retail was still FOMOing in. By the time Bitcoin hit $1,100, whales were already dumping, and the NVT spiked to extreme levels before both the mid-cycle correction and the final collapse. But here's the difference. In April, it reset really quickly. In December, it stayed elevated, showing that speculation had completely outpaced real network activity. That was the warning shot, guys. And we all know what happened next, an 87% bloodbath that led to a multi-year bear market. Bitcoin had two massive crashes. In 2013, one looked like the end and the other was the real top. The difference, mid-cycle corrections shake out weak hands, but the final top is when smart money fully exits. OVB and NVT could have told you the truth if you were paying attention. And guess what? The same indicators flashed warning in 2017 and 2021. So are they flashing warnings right now? Stick around, because what happened in 2017 might just be the key to what is coming next. If you thought 2013 was wild, 2017 took things to an entirely new level. Bitcoin went from $900 to nearly $20,000 in just 12 months. It was the first time mainstream media really took notice. That was ridiculously funny. It was the first time institutions started dipping their toes in. It's the first time your family members also brought up Bitcoin at the dinner table. But just like every bull market before and after, it wasn't a straight shot up. Let's go all the way back to June 2017. Bitcoin just hit $3,000 and people were euphoric. Then boom, 40% wiped out in a flash. Price crashed to $1,800. Panic liquidations, the usual. Mainstream media called it the end. Retail traders swore off Bitcoin forever. Meanwhile, smart money was buying the dip. Sound familiar? Anyways, the indicators, they told the real story. Bitcoin was tracking the stock to flow model perfectly. The crash barely registered in terms of long-term valuation, meaning this couldn't have been the top. And if that wasn't enough, even though the price had fallen, OBV showed heavy accumulation. The smart money wasn't leaving, guys. They were loading up, and the NVT ratio, well, it spiked a bit before the dip, but quickly reset, showing blockchain activity was still strong. This was no bear market. This was a shakeout. We can also take a look at the Pi cycle top, which uses moving averages to tell us when it thinks the top is in. Since 2017, it has correctly predicted the top of the market cycle within 3 days. That's insane. Well, during this correction, it didn't flash. And sure enough, Bitcoin didn't just recover, it freaking skyrocketed. And then came September 2017, Bitcoin blasted past $5,000. Then China decided to ban ICOs, and boom, another 40% drop back to $3,000. Once again, the media declared Bitcoin is dead. China killed crypto. The Bitcoin bubble has popped. Sell everything before it goes to zero. You know, you've heard it all before. Except, again, the indicators weren't screaming a bear market. But the stock to flow still showed Bitcoin was in bullish territory. No breakdown, no deviation, and smart money, well, smart money wasn't selling again. If anything, they were absorbing the panic. And the NVT ratio spiked but cooled off quickly, just like in June. And guess what? Bitcoin didn't just recover, it went absolutely parabolic. By December, Bitcoin had completely gone mainstream. CNBS or CNBC was doing tutorials on how to buy Bitcoin. People were maxing out credit cards to buy Bitcoin, and the indicators, they were screaming danger. Bitcoin overshot the stock to flow model massively. It wasn't tracking it anymore. It was going full speculative mania. I remember that. It was ridiculous. And the OBV divergence, this was the biggest red flag. OBV stopped climbing at $17,000 even though price went to $20,000. That meant big money was exiting while retail was still FOMOing in. And unlike the mid-cycle dips where NVTs cooled off, this time it stayed high. Speculation had completely overtaken real blockchain activity. And finally, the Pi cycle top. It had finally crossed a few days after the all-time high and indicated that the bear market was on its way. And then the inevitable, Bitcoin collapsed from $20,000 to $3,200, an 84% crash. The bear market had begun and it was beautiful. Here's what 2017 proved. Bull markets have brutal mid-cycle corrections. They feel like the end, but they're not. Smart money never sells during mid-cycle dips. OBV stayed strong, and the final top is when whales completely exit. OBV breakdown, NVT overheating, and the Pi cycle top is in. That is when you run. The same pattern repeated in 2021. So are we seeing the same warning signs right now? Let's break down what happened in 2021 because it is eerily similar to what is happening today. If you thought 2017 was madness, 2021 was absolute insanity, Bitcoin didn't just rally, it became a global headline. Tesla jumped in, buying $1.5 billion worth of Bitcoin. El Salvador made it legal tender. Institutions that once mocked Bitcoins, JP Morgan, were suddenly FOMOing in. And the price, it soared from $10,000 to $69,000 in a single year. But like every bull market before, it wasn't a straight line up. Let's talk about January 2021. Bitcoin had just smashed through $40,000. When the first major correction hit, a 30% drop to $30,000. People absolutely panicked. I remember exactly where I was. I was sitting down having dinner. My friends are freaking out. But they were asking, is the bull market over? Did we just hit the top? But if you were watching the indicators, you knew better. The stock to flow was still tracking the model. No breakdown, no reason to believe the bull market was over. On balance, volume recovered quickly, meaning big players were still accumulating. This was just another dip, and the NVT spiked before the correction, but cooled off quickly. No long-term red flag. And of course, the Pi cycle was showing a huge divergence. It was nowhere near triggering yet. And guess what? Bitcoin rebounded, hitting a new high of $64,000. Then came November. Bitcoin topped at $69,000. The media went full euphoria. Retail was piling in, but guess what? The indicators were screaming, danger. The on-balance volume told us everything we needed to know. During the mid-cycle corrections, OBV recovered. This time it didn't. The price was going up, but OBV wasn't. The whales were offloading their bags, and just like in 2017, NVT ratios spiked heavily before the final peak. And about a month before Bitcoin started to fall, the pi cycle top had triggered once again. This meant that Bitcoin's price was running way ahead of blockchain activity, pure speculation. And then, you guessed it, Bitcoin collapsed, and an 80% collapse from $69,000 to $16,000. The bear market had begun. History repeated itself. Again, mid-cycle corrections shake out weak hands, but they don't end the bull market. Strong OBV recovery and dips. The run isn't over, guys. Final peak with OBV divergence, NVT spiking, not looking good. The pi cycle top is crossed, time to run. So here's the big question. Are we seeing the same warning signs right now? Let's break down the 2025 bull market and see if this is just a correction or the beginning of the next bear market. Bitcoin just smashed through $100,000, a historical milestone. But now we've dropped back down to under $90,000, and the fear is definitely setting in. You all know this. Liquidations are piling up, which is great. The same people who screamed Bitcoin to $200,000 last week are now saying the bear market is incoming. But are they right? If you've been paying attention, you know the answer isn't in mainstream narrative, influencer hype, or random TA squiggly lines. The data tells the truth. Stock to flow is calling for $250,000 Bitcoin right now. And that's what the model suggests. But after its failure in 2021, is this still a reliable indicator? Right now, Bitcoin is tracking below the stock to flow projections. In past cycles, when Bitcoin lagged the model, it caught up with explosive moves. The key question here is Bitcoin still following its supply-driven trajectory, or demand changed? Stock to flow says there's more upside left, but it's not the ultimate answer. But if this was just the final top, on-chain volume would have been flashing massive red flags. Right now, though, OBV is still strong. Accumulation is still continuing, and there's been no major divergence yet. Smart money is not rushing to the exits. Compare this to 2017 and 2021, when OBV starts to fall before the crash. That's not happening yet. NVT ratio is just kind of floating around right now, no real drops, which is a great sign. In 2017 and 2021, NVT ratio was absolutely off the charts, and the final top right now, we're elevated, but not at those extreme levels. That means this might just be a mid-cycle correction. And the pi cycle tops that's so good at indicating when the end is here, well, the 350-day moving average and the 111-day moving average are still showing signs of a massive divergence. No cross quite yet. Based on everything we've seen in the past cycles, to us, this looks like a mid-cycle correction. You can even look at things like the Fear and Greed Index, which we spoke about in yesterday's video. It's flashing extreme fear. And like we said, guys, that normally screams buying opportunities. The verdict, we're not at the peak yet, but history says expect more volatility. And I promise you, you're going to get a lot more volatility. If you're expecting a straight shot to $150,000, you're in for a rude awakening. Mid-cycle corrections shake out the weak hands before the final push. So what comes next? If this is really just a correction, the final leg of the bull run is coming. But when that happens, you better know the exit strategy, because that's when the real crash begins. You do not want to be holding your coins then. History tells us one thing: the real top doesn't come when retail is panicking. Remember that. It comes when they're euphoric, guys. It comes when mainstream media is euphoric. Right now, there's still fear. That means there's still time. But don't be the guy who ignores the warning signs when they finally show up. So here's the big question. Is this just a dip before Bitcoin explodes to $150,000? Or are we staring down the barrel of another 80% wipeout? So what do you think? Mid-cycle correction, or is the bull market already over? Let me know your thoughts below. If you want to check out when we are eventually going to be selling, which we are definitely going to be selling, probably close to the top. We've already taken profits already, which is a fantastic thing. Our subscribers are loving us. Check out learningcrypto.com. You can buy cool merch like this, and you can buy Heidi's book if you want to really learn the history of why Bitcoin was created. It is one of the best books ever written on Bitcoin. Talk to you guys soon.